following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Meow, meow, meow. Looking good, Billy Ray. Feeling good, Lewis. As you might guess, this isn't Tom O'Brien. This is Billy Ray Valentine, also known as Larry Pesavento for TFNN. Folks, we have a lot of things happening today with this week with this volatility that we have. We're going to have Shane Smolian from wolftrader.net, the premier astrologer that we use here, along with Norm Winsky, and he'll be on at the half hour going over some of the things that he's looked at and showing you what we're watching, because he was on this week and he shared with us the fact that on the 10:30 time frame on Tuesday and Wednesday, the Federal Reserve came in, and that's when the market turned within 10 minutes of that spot. So that was really, he does some of the best, he does the best Fed work that I've seen. So he'll probably go into that a little bit also. But let's get to the markets. I've posted the chart for the IBB. As you can see, that had been the leader of this big bull market for many, many years. And you can see we've had a tremendous correction. We're rallying back with the rest of the market today. But the key will be what happens here over this weekend, because we have so many things happening that are just absolutely huge cycle-wise. They started on the 30th of June, right after the Brexit vote, and they continue all the way through this weekend. And by Monday, when we come in, if the market is really strong on Monday, which I expected to start maybe a little bit higher, but then we'll probably turn down from that level. But I'll share with you that on Monday when we get ready to do that. A little bit of it today, but it might be totally wrong too. But we'll see if it's going to do that. We'll just have to wait and see. The interesting ones is that we had a really nice ABCD patterns in gold and silver this morning with a $2 break from the high in silver. And then what do? We rally back $1. And this thing is jumping around. It must have jumped probably $35,000 these from Monday through Friday this week in the silver market. And we also lost open interest in both gold and silver. That's usually not a bullish sign. But we had a $40 break in gold early this morning with the jobs report, and then the market reversed and took it all back, and it's going to close higher by about $20 on the week, which is very positive, because if it would have closed lower, you would have had a weekly reversal in silver and in gold. But in fact, we really didn't do that at all. So it still looks very, very positive in the metals. I don't know where all this money is going to go, because there's money coming into bonds, money coming into stocks. It's got to come from somewhere, and I guess it's going to come from, where would it be? Well, maybe from the cattle market. Well, it won't be the cattle market, but we'll see. Let's just take a quick look what we're looking at with the market coming in here with the Dow Jones closing near the 18,000 level. I wanted to just give you an example of what we're looking at here with the Bradley model, and then we'll see what happens. But this is going to be real interesting. We're going to test to see how these astro cycles really work this coming week, because I don't believe this is going to be a valid breakout. I don't believe it's any more than a major consolidation, again, that we've seen many, many times before. And the way I say that is because I look at the New York Stock Exchange Index as one of the main things that I follow that has, really kept us on the right sides of these market most of the time. And it certainly is doing nothing more than making a retracement. We haven't even made a 78% retracement of the high from May 19th as of yet, as you can see from this chart that we've shown you on the New York Stock Exchange daily chart. If we look at the really long-term chart that we've used to say that this is nothing more than a giant consolidation up in this area, this is our chart from our good friend Jim Bartolioni, and you'll see this is a weekly chart going back to 2007 and 8, and you'll notice that we have the same type of pattern in 2007 that we do in 2008. The difference is we've had longer periods of consolidation here, and that is in tune with what really happens, because this has been the biggest bull market ever. And I think, we've gone from 41 from 1932 to 18,000. So this is by far the biggest bull market ever. We've had some big swings in between, I might add, but this is a really monster that we have going on here. And it's really, when you look at the bond market, it's just the same thing. So something big is getting ready to happen, folks. And when it does, it'll be some type of an event that'll probably, it won't be the thing like the Brexit thing, because that was not big enough. It's got to be something bigger than that. I don't know what it could be. Maybe it's geopolitical. It could be, an earthquake. I mean, it could be something really crazy that would change the thought. But we're up at this area where if it breaks out to the upside from here, I have to go back to using the old crossover of the 200-day crossing over the 400-day moving average with my oscillating oscillators, which I really don't want to get back into that. Terry in the Dem just says maybe it's riots, maybe we have to go to martial law. I'll tell you, another event like what happened in Dallas, and people are going to be probably thinking that something really has to be done. It's a very sad situation when we see something like that occurring. But folks, it's not guns that kill people, it's people that kill people. Unfortunately, we've got some really big events coming up very soon. We've got the Cleveland Republican thing, and then we've got the Democrats in Philadelphia. So this is really going to be a real interesting summer, I would guess, a long, hot summer, as they say, much like maybe we had in 1968 when we had the Chicago riots. But anyway, let's just take a look. You can see that this Bradley model is at a point where if it inverts from here, we will probably be up into Thanksgiving. That's the bottom line. But this market has really, they're looking at the Dow Jones. That's the wrong thing to do. It is not what the real market is doing. If we take a look at what the NASDAQ is doing, and this is not quite up to date because I did it a little bit, I did it early this morning before I had to, just give me 1 second here and I'll put it up here. There we go. I'll put it up here so you can take a look at it, but we haven't even taken out those highs yet at the 4,600 level. Getting close, of course, but we'll see how this works out. But remember, any market that can go up 200 points or 250 points can come down 250 points. The 1.618 expansion on this S&P move that we've had since early July, since early June, comes in at 21.28. We had a small one today at 21.15, but that went through it like melted butter. And once you went through that by more than 5 points, we got to take a break here. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
On Monday, and we'll be certainly glad to have him back because he's got a great show. He's got a great website here to help everybody along, and if you really need help with your trading, you ought to check in with www.tfnn to the Tiger's Den, because they got some pretty smart cookies in there today, every day, but it's something to take a look at. We got Shane Smolian coming up in about 10 minutes, who we really want to give as much time as we can, but I wanted to go over a couple things with you. The first chart that I'm looking at here presently is the chart of the 10-year notes. This is the one that determines your interest rates on your cars, your mortgage, your credit cards. This is the big one. This is about 6 times bigger than the Treasury bonds. You'll see the Treasury bonds in blue. You'll notice that they have been basically parabolic all week. They're closing right near their highs here, near the 177 level, which is the 1.618 expansion on the long-term weekly. If you'll notice that the Treasury notes have not even taken out the highs of the post-Brexit date of June 27th. They have just been, and this is a very, very large market. And the other thing that's important to remember is that we are losing open interest in Treasury notes at this level. And the amount of open interest coming into the market, new into Treasury bonds, is really declining quite a bit. In other words, the rate of change of new people coming into the bond market is dropping. And that means that the market's going to have to go up on short covering, which it certainly can, but at least it's showing signs here of there's a few cracks in the old wall that might end up being something a little bit more. But this Treasury note chart is really a divergence between what's happened, in the Treasury bond. That's very unusual to see that happen. The whole world thinks that we're looking at negative interest rates forever, and that might be true, but history says that something else is going to happen. What that something else is remains to be seen, but that's neither here nor there. Now, I've got a few minutes here. I want to go over something. I know you're going to think I'm nuts here, but most of you do anyway, so it's not a big deal. Let's take a look here at heating oil. I'm a Gartley person. I believe what Gartley said on page 222 of his book that look for those ABCD corrections in a bull market and buy those. We have one in heating oil. As you can see here, it's making a 38% retracement from the low in April. It's a perfect ABCD pattern, as you can see here, starting in June. So we've been down roughly 5 weeks, very, very moderately, and it's also equal in the exact low that we made in April. In other words, the distance down between where we are now in the high and where we were in April, those are exactly equal. Those are symmetrical retracements. So this is something that you really want to pay attention to coming into the market next week. Now, maybe it's going to give up the ghost and break down, but this is something that you have to look at. If we look at the rest of the complex, and we'll switch over here to the gasoline, and we'll take a look at this. You'll see that we have another ABCD pattern in the gasoline, but notice that this has taken out the April low. Can you imagine how weak this is compared to crude oil and the heating oil? I'll show you crude oil in just a minute, but this has taken out the April low, whereas the heating oil can only make a 38% retracement of that move. That's a sign of strength, folks. So you got to pay attention. This is a very interesting pattern that shows signs of some really neat things maybe for Monday. So keep an eye on. They don't always work, but the ones that do work pretty good. Now, getting back to the old Gartley stuff, where he said buy the first ABCD pattern in a bull market, and you'll see here that after we made the 61% retracement there at $51 and change, what have we done over the past 5 weeks? You see a perfect ABCD pattern. It's a little 3 drive to a bottom that you can see over the past 5 weeks or so, but it's perfect right at a 38% retracement of the April low. The distance between the high of 51 and where we are now is exactly the same as where we were in March to April. In other words, they're symmetrical retracements, and so it's got all 3 of these are lining up very nicely. So I would put this on my watch list. And you're looking at some stocks like Exxon and Chevron, with the stock market going bonkers. These are, very strong. And so don't rule this out, because this is one of the things that Gartley said was to look for those ABCD patterns in a new bull or bear market, because those are the ones that, will sort of lead you to the promised land, because you're certainly trading in the direction of the trend. You're buying a very accurate pattern. It's better than 70% accurate. And especially when you add the ratios in with it, this is the type of thing that you really want to keep an eye on starting at the first of the week. That's the main thing. We'll see what's happened. So anyway, that's what we'll be looking at here come Monday for sure, along with the other things. There's one other chart that deserves our attention here. I know some of you folks are interested in Treasury bonds, as I am, and I bought those this week right near where they're trading right now, but I wanted to share with you, since you do like some of these ratios that we put up, and the main one, of course, is this 1.618, and as you can see here on the T-bonds, which is the ETF for T-bonds, which is the TBT, you'll notice that we were making a 1.618 expansion from the low in January of 2015. And so, if it goes lower than this, folks, she can go a whole lot lower. Remember, this TBT in 2008, you'll never guess where it was trading, folks. Are you setting down? Yes, I see that you're setting down. $280 a share. Shut the front door and raise the rent. How would you feel if you'd have bought that and rode it all the way down? Somebody probably did. Somebody that's got no skin in the game for some mutual fund for, Dewey, Cheatham, and Howe, whatever hedge fund it might be. But that's the kind of stuff that does go on. But from 280 down to 29.5, boy, that's one heck of a drop from the long thing. One other thing that I did wanted to bring up, and that's from our good friend Larry Williams. He had a cycle projection that he's very, very good at, and I wanted to bring this to your attention. If you have any interest in his program for bonds, you should give him a jingle on email. His email address is ireallytrade.com, and you'll be able to get him there, and he's got a really good report on this. As you can see, he's looking for the market to turn down on July the 12th, And that is going to be just about on Tuesday, I believe, isn't it? Yep, Tuesday. That's how they do that. You take the 11th and add 1 day. We're going to have Shane on a little bit, and we'll get to some real serious stuff as we get through some of these things. One other market that is making a 1.618 expansion on the longer-term picture is over the last 2 years. We are hitting a 1.618 expansion on the Dow Jones Utilities. That came within 4 points of the exact 1.618 correction, or excuse me, expansion of the move from 2015 to where we are right now. And it might be off by just a little bit because my drawing tool was so sensitive that I had a hard time, lining it up. So keep an eye on this. We're over some really stuff that we're looking at. So basically what Larry is saying, he was very bullish stocks, by the way. He's been bullish stocks for quite a while. His main thing was he had a special report on Treasury bonds, and he's looking for a major top in bonds in here, as I recall. And I've sent some of the charts out. Anyway, we'll have Shane on just 877-927-6648.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. This is Larry Pesavento setting in for Tom O'Brien, and we've got Shane Smolian from wolftrader.net on the line. Shane, are you there?
Hi, Larry. Can you hear me?
I hear you perfectly. It's like you were sitting right next to me here in 103-degree weather in Tucson, Arizona. Listen,
wow.
we've got a little bit of time here, about 25 minutes, and I want to
Okay.
give to you because you were on earlier this week, and folks just went absolutely bonkers for your stuff, and we really enjoyed it.
Thank you.
Especially when you told us that 10:30 period in the Fed stuff. I mean, 3 days in a row. I mean,
Yeah.
people think it didn't work today, but boy, for 3 days it was spot on.
Yeah, that's when they tend to come in, and that's when the auction starts.
Sure. Okay, why don't you go ahead and start out with the first chart that we've asked to post, so it's in there. Why don't you, and then tell me when we're ready to go number 2, and we'll just move on.
Sure. Are we okay? So these are just some past market calls, and I just wanted to go through this just to talk about how the newsletter works and how these forecasts come to
Good. This is what we
fruition.
like to hear.
Okay, so this was back in March. So we talked about in the beginning of March, at the top in the chart A, we talked about there was a coming rally. We've been very bullish on the market, up to this point now. Now I'm bearish. But we talked about the planetary speed index was rising, and you can see that it was bottoming on March the 1st. And I had said in the newsletter, I said there's a potential for a large rally. It could go all the way up to 2040 by the 17th. And on the 17th, it actually closed at 2040.59. So it actually hit that exact level, which I think was was a little bit serendipitous, a little bit lucky because I was using those Fibonacci projections. But the main thing is that I was able to forecast that using the speed index. I was able to pick these tops and bottoms and find the fastest part of the move by aligning the market with this speed index.
Very good. And I really like that speed index because that's the stuff that George Baer used, and he was certainly one of the more successful astrology traders from the 1930s. You want to go on to the next one?
Sure.
Okay, just give me 1 second here, and we'll pull it up, and there you go.
Okay, so we're on chart B now.
Chart
Okay.
B, yes, sir.
Yeah, this was, again, this was another chart, which is just the combined transits. And so you can see up there on the chart, we call for two potential tops in the month, the first one being on the 17th and the second one on the 31st. And you can see that the market more or less coincided with those two peaks. So again, this is not the speed index, this is just transits, but we were more or less able to pick those rounding tops on the market by looking at these different viewpoints. And then again, we look at different viewpoints of the market, and the hard part of it is when you start looking at so much data, you have to kind of simplify it and come down to some decision points. So this really helps us when we have an agreement like this, like we had on this month, that we were able to see, these two peaks happening on the 17th and the 31st.
Mm-hmm. Now, tell the folks what a transit is, because a lot of the people that listen, this is a totally different audience than my show, and Tom has got a much bigger audience. So why don't you tell the folks how simple explanations for a layman what a transit means, because it's just really cycled numbers, isn't it?
It really is, and all that it is the geometric relationship between two planets on a longitudinal basis in the sky. And basically what that is, you can think about it like hands on a clock. So there's the hour hand, there's the minute hand, and there's the second hand. So these different planets, if you think about a clock, the way that the clock would look at like 3 o'clock, you would have your minute hand at the top, the hour hand at 3, and it makes that 90-degree angle. Well, the planets will make certain angles. They'll make 90-degree angles. They'll make 120-degree angles. And some of them are harmonious, and some of them are bring more conflict and can be more difficult. So these transits, these oscillators basically tell you, when you see a lot of green there, those are a lot of positive angles between the planets. And this is like hundreds of planets, hundreds of aspects of planets here. And that's why I like this, because it's a big picture.
Well, that's a great explanation. Okay, let's move on to chart number 3 here, and we'll start with that one.
Sure. This is some experimenting I was doing, which is I found this to be fascinating to me, and I've been doing astrology for many years. But even when I do these charts, it amazes even me. It just never amazes, never stops amazing me, I guess is what I'm trying to say. So what I did was I took the date, the Fed inception date, the date that the Federal Reserve was started, and I created their own customized transit chart for the Fed, and then I put it against the market, and you can see that the transits of the actual Fed match the market. If you look where it says A, then B, then C, you see those bottoms there? It more or less traced out what the chart of the Federal Reserve was. And the reason I did this is because the market is so dominated by the Federal Reserve. I figured, well, I was looking at the transits in the sky for everything, but since it's so concentrated in the power of this one agency, let me do the transits for this one agency. And so that's what we do in the newsletter too. Now I'm able to just look at the Federal Reserve's chart and it tells me these transits. So that was the date it was created, the inception date. So now we're able to use this chart to help us forecast.
Oh, that's great. This is such interesting work because you explain it so easily. It's really good. Now, we want to go on to the next one now. This is a chart D.
Sure.
So you're going to use Janet then, I guess, as the. This is no one's ever done this. I mean, I hear about it, but no one's ever actually done this. So this is really interesting to me also. So, okay, we're on chart D now.
Okay. So then the interesting thing is this: if it works with one part of the Federal Reserve, it's got to work with all of them, right? I mean, that's the whole point. Like, if the Fed is controlling the market, all of their charts should work. So I looked at the inception date of the Fed. That works. Now I looked at just Janet Yellen's birth date because she's the head of the Federal Reserve. And if you take a look at this chart here, once again, these relative peaks and troughs match what the market did. You see it on A, that was the peak there. It fell down into B. It rose up. It fell down into C again. D was a peak, E was a relative bottom, and then it went all the way up into that F period again. So again, just using her chart, it worked. And then go ahead.
Did you, by any chance, go back and look at Helicopter Ben and also?
Oh yeah, I did.
Alan?
I did. And they do correlate, and we've also found that in the charts of the Federal Reserve, they all have almost a genetic blueprint. It's really interesting. One of them is the Jupiter Apollon energy, and that is the signature of large amounts of money, and that is the definition of the Federal Reserve because they print money, and that's in all of their charts. It's very interesting.
Wow, that's cool. Okay, what's the next one?
We can go to chart E.
Okay.
That's just another chart that I did of the Fed. This is the first date of operations, like in other words, when did they start? And
this
then
was 1913, December 26th?
No, that was the that one. This is the operations date. The first chart I showed was that one. This one was when they actually started the operations. And again, you can just see it follows the charts. I mean, when A was a peak, you can see up here, it fell down into B, it rose up into C, fell down into D, it rallied up into E again. So it's really amazing, but it basically proves the point here that no matter how you look at this, it doesn't matter which chart you look at, the market is modeling what the Federal Reserve is doing.
Wow. So it's really telling you that's what the market is, the Fed, pretty much. And that's what you've been saying all along. And you've been proving it in the charts when we've had you on our show that every time they influx the money, the market goes up. And when they pull it out, the market drifts lower. And it seems to be. Are the other central banks doing pretty much the same thing? Oh, we got to take a break here. Stay with us, okay, Shane?
Sure. Thank you.
Thank you.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Okay, we're back, folks, and we've got Shane Smolian on the line. And Shane, I think we left at the we're getting ready to start the annual solar cycle.
Yes.
Okay, let me get that one up here. We have a question from someone in the den. I think you're going to answer it maybe a little bit later, and that is whether you're bullish or bearish on the market. And I'll wait till you get to that spot. How's that?
That's fine, and I'll talk about that. It's gonna depend on Monday, which I'll get to towards the end.
Okay, good. Fire away.
Okay, so this is really interesting because you've heard of like the Stock Traders Almanac, right? Everybody's heard of that. You go into the bookstore.
You betcha.
Yale Hirsch, there you go.
Yeah.
And it's a really interesting study, right? Because they look at the market and they say, on this day the market was up 60%, or on this day it was down, 40%, whatever it is. So what this is an annual cycle, so it's very much just like that book. But what I've done is I've only taken the data since 2009, since the Fed began dominating this market. So in other words, it's just like that book, but it's only for the most recent market. So you've got about 7 cycles in there, which is a good number. I like to get at least 5 cycles, I would say, is good. And you can see here that it did a very good job of tracing out the high in April, and it goes over there. You can see on the left-hand side, and then in the middle, there was a high in May, and there was a strong down leg, and it actually forecasted the bottom almost to the exact day. It was very close. It was right around the 20th of May. Now, I expected this market to go down much more then, and this highlights the next point, is that you have to be able to be flexible with your forecasts. So if we go down to the email, I put a couple emails in here just to emphasize the importance of this, because if you just put out a newsletter once a month, that's a long time to go between forecasts. So if things change, you need to be able to see in the middle of the month what's going on. So I have in G, on the 18th, I was telling people, because I had talked about this rally, I told them, I said, listen, this market, we're in the most negative portion and the market's holding up, that if you're short, you need to be careful because this power of this coming rally can take people by surprise. So I was warning people about this because in the middle of the month, it's kind of like, well, yeah, it went down, but didn't go down as much as it should have gone down. So I was able to see that ahead of time and send out a warning to people. So if we go to H.
Now, some of this warning that you have is related on when you see the Fed start dumping in money, don't you?
Yeah, it's a combination of things. Like, for example, that pullback in May should have been deeper, right? And it wasn't. And so I was also looking at that. And so on the 20th, I sent out an email and I told them, I said, the market basically made an important low yesterday. I told them that. I said there's very little downside left to this. This thing is about to take off and start running. So the importance here is that you're able to be flexible in the forecast. So in the middle of the month, I can send it out and say, look, it's not working out. It is working out. I can give guidance on that. So a couple times a month, I can send that out and just tell people what's going on.
You know, you alerted us when you were on last week about the fact that the Brexit sell-off was virtually nothing, especially in the NASDAQ. I mean, it didn't even, it couldn't even make a 10% correction, and yet now we're back, blowing away the highs. So that was another indication that there was something a lot stronger in the market than it appeared. But we've got these huge dates coming up that should end on Monday. I would be the last part of it. Let's go on to your number I, or letter I. Is that the one you'd like to go to? Okay.
This was just the rally that occurred after that email, and I could see that was and we were supposed to rally into July the 2nd, and now this is not perfect science. I mean, this is not. I mean, I think I'm getting better with the Fed juice. It's given me. It's really helped me out in terms of giving me the insights because I can tell the relative strength. But the Brexit, something like that, I was out of the market before it. I didn't even want to deal with it. But I did know. I was able to know. If you go to the next chart, if you go down to the J, I was able to know that when that declined, that probably was not the end of the rally, the end of the line. It wasn't going to keep going down. And I was able to send out an email warning people saying, listen, I know this looks bad. The market's declined a lot. We're probably in a new bear market, but it's going to rally back up into to the second or the third. And so this is the planetary speed index here on July the 3rd. And it went right back up into that. And then on the next one, on K, this was the chart of the Fed, and I showed you on the other charts where I'd actually do the actual chart of the Federal Reserve, the Fed, the inception date, and that went all the way up to July the 2nd. So it's very nice when they all agree on a certain date in time. So we can kind of say, well, okay, there's a high probability that these cycles and transits want to go up into this period of time.
Okay, that's great. Now, one of another questions from one of our listeners is we are coming in here like we had these craziness over the holiday. Will you expect the same type of thing happening starting in Asia on Sunday, or do you think we'll have to wait until we open on Monday at the New York Stock Exchange to see if this is going to be a turn date?
I think we need to wait. Do you have that other chart, the Fed use chart that we sent?
Is that the one just Jay that we just did, or is that the one from
I sent one that just said last chart. It was just the Fed.
Let me see. Well, I've got it. Just a second. Hold on,
Sure.
just a second. I'm not as smart as I once was, but I can still get it done. Hold on a second. Okay,
Sure.
Here we go. We'll pull it up here. This is the one through today, probably?
Yes. This is the updated the Fed use. And again, okay, so this just highlights here that just how powerful this current Fed phase is that we're in right now. And even though it's pulled off those highs, you see it made those highs at the Brexit. You can see that last little shoot up into the Brexit, and it pulled back. We're still at relatively almost near all-time highs. So the levels that it's at, it's still right around the level of when AIG failed. That's the amount of money they're putting in still. So we're still, and today we saw the market, we saw the market shoot up on the jobs report, and then they had we have these relatively high numbers. So it was able to maintain. So I really need to see what's going to happen into next Monday because, we're expecting some type of a bottoming day late next week in the mid-month. So if this holds up through the beginning of next week, then we can expect the rally to extend through the end of the month. But I have to wait and see. I'm still favoring it a collapse here into early next week. I'm still favoring it to sell off at this point. But this is what I was talking about, where you really need to be flexible with the forecast, because if it changes on you, it's like a Bayesian analysis of statistics. You have to see what the new data is telling you, and then adjust, and then you can adjust your forecast. So I'm still bearish right now. I still think the odds are we will decline next week. But if it holds up through next week, then there's a good chance it will rally through into August.
So we're looking at this 1 or 2 day window starting at the beginning of the week, and that'll give us a pretty good idea, which makes good sense because if you don't hold new highs, people will look at it as a possible false breakout that we've seen many times before.
Absolutely.
So, and we're not seeing this in the overall New York Stock Exchange Index. It's just making a normal, 78% retracement. So that could be something else that will be really interesting. We're going to have to, I think we have a break coming here. I'm not used to doing Tom's show, but here it comes. Stay with us, and then we'll have you on at the end of the show. You tell the folks what you offer. Okay, Shane?
Okay. Thank you, Larry.
Thank you.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. This is Larry Pesavento sending in for Tom O'Brien, and we have Shane Smolian from wolftrader.net. A lot of you folks have not heard of Shane because he's on my show, but not on Tom's. But Shane, why don't you tell the folks what you offer? Because you've got great information and it's incredibly reasonably priced. So why don't you let the folks know how they can reach you and what you offer?
Sure. If you want to reach me, first of all, you can email me at Shane, S-H-A-N-E, at wolftrader.net. And the newsletter, to sign up, it's $36 a month, and I really try to make that a reasonable price. And I give a lot of information, and I really try to give a reasonable forecast, and I give a few updates throughout the month. I think It's worth trying out. I really try to give you a good value for the money. If you're really into full-time trading and you want to follow my trades that I make on the day, we have a full service package, a Twitter package also. That's a little bit more. But if you just want to get some basic monthly good astrology forecasting and some information on the Fed, it's a really good service, and I think you're going to find that there's no services out there that will tell you what the Fed is doing in terms of the amount of money that's flowing in and out. So I think we're unique in that regard.
No question about it, and we've had you on the show, and some of the things you've shared with us have been absolutely phenomenal. Well, listen, I'd like to have you on again soon, and anytime you feel like you want to, tell us something, be sure to drop me an email or Skype me, and we'll get you on as soon as possible. And I hope you have a wonderful weekend. And
Thanks,
again,
Larry,
I want to thank you for joining us. Okay, the Shane Smolian of wolftrader.net, and I can hear the sounds of one hand clapping already, so that's a good thing. Thanks a lot, buddy. Listen, you have a good time this weekend, and take care of Jackson, okay?
I will. Thank you. Bye-bye.
Okay. All right, we'll have Tom O'Brien back in the saddle, coming off the boat. I guess, what do they call that thing up? Is it a cab on those boats? I don't even know. I don't particularly like boats, but we're going to see increased volatility everywhere, folks. I mean, we've had a $7,000 move in gold today, 30 up, 20 down, 20 up. I mean, it's just amazing. Silver has moved $10,000 today, almost 9,000 and change. So, and even Treasury bonds, is usually as quiet as they are, have moved $4,000 over the past 24 hours. So we're starting to see some rocking and rolling. So hopefully some of the stuff that we have here at TFNN will be able to give you some ideas. I know the patterns work pretty well, but they don't work all the time. But we have other people in here that have great information that you can use to help, take a few bucks out of the market. The one thing that I'd suggest, and that is take a really close look at this heating oil complex, folks. We got oil, gasoline, and crude oil all lined up with perfect ABCD patterns. You don't see that very often in the complex because usually, there's one leading the pack. And if I had to pick a leader, I would have to say it would be the heating oil because it's retraced less than anything else. The gasoline is traced down to and taken out the April lows, where we never even made a 38% retracement in heating oil and in crude oil. So there's something going on there that deserves your attention, if you like pattern recognition, and I certainly do. So that's why I'm bringing it to your attention. And since we had Norm on yesterday, and we also had Shane on today, they're both talking about this Monday coming in. So watch for potential reversal in the stock market around Monday. That's a big, big Bradley date. It's the end of it. Actually, I thought the end of it was going to be on the 5th, but it can extend all the way out through the weekend. But after the 8th, as Shane mentioned, if we're up on the 9th or 10th, we could be up for the whole month and maybe all through the summer into Thanksgiving, because that's what the Bradley model is saying, that we're looking at a really strong trending market from this week to Thanksgiving, as you've seen on the chart that I posted here. So that's going to be interesting. So have a wonderful weekend. Say some prayers for the poor folks that have the tragedy down in Texas. My God, it seems like every weekend there's somebody out there. So live every day in an attitude of gratitude, and may God bless.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom, how's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bids. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we got a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for
for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe
Thanks.
one.
You too, bud.
Now, Tom O'Brien.
And this is David White sitting in for Tom O'Brien. Normally, this is a repeat on Friday, but we wanted to do a special Tech Insider Hour where we kind of expand and look at technology. We haven't done one of this in a while. It seemed like we did these Friday things for a great deal of the time, and then it got really easy to just leave an hour early on Friday. And, we're going to kind of throw that out here now. Just do the 1 hour here with technology with a broad brush. Of course, I write the Technology Insider for TFNN. My newsletter comes out every Friday. And it's kind of a longer term look if you wanted to put some things in your IRA or you don't want to trade on a daily basis. Most of these trades, I keep on hoping, will be much longer. Unfortunately, the government, the FOMC, everybody else comes by. We've made some pretty good money on some of the trades over the last 4 or 5 years. And caught some of the big moves. I'm hoping now that there are a few things changing, especially in technology. One is that interest rates, whether they go up in 3 months or 6 months or a year, is probably one of the absolute best things that can happen to technology. The reason why? Right now, when interest rates are free, why not go out and build a brand new manufacturing plant since the money's free? It doesn't cost you a whole lot. Whatever the cost is, you hit that. It's not like when interest rates were 10 or 20% and you were hoping to get 6% back making some kind of widget. That's where higher interest rates really see values in technology rise because guess what? How many manufacturing plants are able to make a 65% margin on something? The answer, 2. Apple on its iPhone, Intel on its processors. That's it. There aren't a lot of people out there, or almost anything, that can earn the kind of margins that we're talking about on a global scale. Even in consumer electronics, most people don't know, but what you try to do is if you think that you can sell a device for $299, that product better not cost any more than $100 to put in there. You normally want to triple the price to get to the retail selling price of $299. And that probably means that you're probably lucky to make 20, 22%, maybe 25%. That's fairly common for box sellers. Let's say not Netflix, Netgear, or any of the other people that make routers, that kind of stuff. 25%, pretty good. 20%, pretty typical. Car manufacturers pretty much live on 6%. One of the reasons why I think that Tesla is so overpriced, especially when interest rates start going up. When you're talking about a $300 device, people probably maybe put it on their credit card. When you're talking about a $60,000 device, there's a world of difference when someone goes to finance it and suddenly there's 8, 10, 12, or 15% interest rates one day, as they probably will be in the future. Why technology really started to ramp up and do so well in the 80s. Of course, we were coming off these ridiculously high rates that were caused by poor planning, mostly from about 1976 on, changed many of our policies with a new president, and many things started to turn around. We also had a very good FOMC chairman that was willing to bite the bullet and make us go through some tough times by raising interest rates. By 1985, we had companies like Microsoft starting to go public. And in the next 10, 15 years, a huge amount of wealth generated from those companies. Most people say, who did the most good? Was it Mother Teresa? Was it any of these people giving free food out to others? And the answer is Microsoft is probably responsible for more good in this world as a byproduct of what they did than all the good that everybody that was just trying to do good only has done. From the taxes to the philanthropy of these folks, much better to go off and make a giant pile of money and then give it away than go off and try to get money from others out there. And you just have to look at the kind of money. How many people could give 10, 20, 30, 40 billion dollars away and still be the richest man on the planet? Well, Bill Gates. Anyway, I wanted to talk about some of the bigger picture as we go forward, kind of a mid-year review, especially of what I'm working at and looking to play in the Tech Insider. We've got multiple positions in some of these sectors already, but I wanted to talk about the big picture and what you should be looking at over the next few years. And some of these things are ready and what's happening. I'll probably get started right now. It'll probably take me into the next segment. You can always give me a call at 877-927-6648 if you'd like to add or ask a big picture, broad brush question about it. And we're probably not going to look at charts in this area too much. But if you want to think about what I think of a company, their challenges, what they need to do, make sure and give a call, 877-927-6648. Of the sectors that I'm really concentrating on the Tech Insider, which we own positions in, some of these already. The first is machine learning. Don't think a lot of people have thought a great deal about it. You hear a few comments about it on CNBC. Some people talk about it. Machine learning's a rather deep subject. I've written about it extensively in the Tech Insider to try to give the readers and subscribers a little idea about what's going on. But there was a lot of promise and a lot of discussions in the, let's call it about 2005, with all kinds of ideas of how these new machine programs would learn from data without you teaching them. Those things are actually now starting to become real, useful, and you see them advertised, although they don't say that they're machine learning. When we come back, we'll talk about a few of the examples of them. I've taken some college courses on them over the last 6 months. I'm starting to write my own machine learning algorithms to tackle the market. Some of those you may have heard on my daily show at 2 o'clock. But machine learning, a very big subject. We'll talk a little bit in the next sector. And, of course, storage, just-in-time manufacturing, genetic editing software, energy storage, quantum computing, and nuclear energy to round out today's show.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. We're going to go to Al in Denver. How you doing today, Al?
How you doing, Dave?
Fantastic.
Good.
So what do you want to talk about today?
Well, I wanted you to take a look at this IBB. I want to short this thing through LABD.
Mm-hmm.
And I was wondering if you'd take a look at it. It's dropped down here pretty low. And when that stock gets ahead of steam up, it really goes. So I don't know if this is a good time to enter or not.
Well, I was long off the that Monday low of the Brexit thing in the IBB.
Okay.
Because I thought it was looking for a fairly decent bounce. And, of course, it looks to me like this thing's kind of in a bigger trading range right now. The IBB itself, probably somewhere in the high 280s to this 240 level out here. One of the things that you would have liked to seen, of course, is this little gap down from the 10th of June get blown through with a little bit more volume than we had today. It closed at the high of day. This isn't a monster volume day, but my guess is that this is probably going to, with the close today at the highs, that we're maybe looking more at a test of this 286, which is the June 6th high. So I would offer discretion. This thing has already been beaten down fairly hard. I don't know how politics can get any worse for it. So it's one of these things that is the whipping tied to the whipping post. So to me, I was short the IBB when it first came off the top. When these things get back in here, it's a little tougher to make more money. And I really dislike the fact that everybody is short the sector. So I would give it a little bit more discretion.
Okay.
Especially through expiration, although we may have a volatile expiration. I think it has a lot more to do with earnings than anything else. That we closed at the high here today makes me think that that 286 is much more likely than pulling the trigger here today.
Okay, Dave.
Okay.
I'll hold my fire.
Wait for the whites of their eyes.
Okay. Thanks, Dave.
You bet. When we were talking about before machine learning, these are the biggest sectors, I think, in technology that over the next 2 or 3 years will vastly outperform most of the companies that have already run. Facebook, Amazon, Netflix. Most of these companies have gotten probably 80 or 90% of what they're ever going to get back into their highs. You want to look at companies that offers, the kind of the growth level of those stocks, but today. In machine learning, these companies are just really coming online. We have one position in that in an older established company. But if you think of machine learning, literally just about everything you do now online has at least some level of machine learning behind it. And think of machine learning as a statistical model. But instead of a human sitting back and saying, I think I've got an intuition, I'm going to look for a very certain thing. Let's say it was stocks. And you go, I've got an intuition about the way that markets work, and I want to test this specific theory out. Well, that's great, but you have to have an idea what your specific theory is already. There's a thing called deep machine learning, which looks for hidden things that humans would never find. And that's generally the kind of machine learning that I'm really interested in, the deeper machine learning that finds hidden connections. That is where the big money is being made. If you had somebody graduating from high school right now or college, my guess would be to have them be a data scientist. These guys, if you actually come out with a degree with data science and statistics, starting pay is about $400,000 a year. I'm going to say that again. A data scientist with top grades, your starting pay is about $400,000 a year. So just be very very wise to the fact this is the hottest sector in software today. The other next thing that I'm going to be, that we are focusing on is the long-term storage. We talked about Intel's foray into new storage technologies, and also even what we've seen in Western Digital and Seagate over the last few years. The business is really changing. Most people are not buying a great deal of hard drives anymore. Most everything is on the cloud. Somebody actually said yesterday, or maybe the day before in the den, that people don't buy PCs anymore. Well, that sounds like no PCs are being sold. The answer is that people are still buying PCs at a lower pace. They tend to be buying much more expensive PCs than the $200 or $300 or $400 ones you see in the stores. Those are the ones that are selling poorly. But guess what? It's the very most expensive PCs that you never see. They're called servers. That's why Intel still is doing horrifically well. They're selling server chips, and those server chips are not making 65% margins. They're making 100 or 200 or 250% margins. Intel, of course, bought Altera to put in additional capability inside the processors that you can program later. That marriage of Altera and Intel is just now starting to bear fruit. But their storage plans, the way that things are moving away from spinning drives, means that the old stalwarts, Seagate and Western Digital, are probably going to be on the ash heap of history fairly soon. So you get a lot of moving pieces out here. But the real change in that is going to be that spinning drives go away. And, of course, memory replaces the spinning drives for mass storage. Just-in-time manufacturing, we've seen the boom and the bust. I look at this, many people call in. I think I got a call on DDD today. Just-in-time manufacturing, 3D printing. There's a great deal of new stuff coming out in this sector. I wrote a big, long piece for my subscribers a year ago in the summer. Said that there probably wasn't a great deal that was going to change in either companies like DDD or HP with their 3D manufacturing push, and, of course, Stratasys and others. They've kind of come down, but I'm thinking that these are sectors why you may not want to buy at the price today that you want to be watching. These tend to and are tending to act much like Amazon did. Split adjusted, Amazon was like $100 around 2000. It went to what, $6.70 or $8 or something off that $100. So it got to 1/10 of the price, and slowly it started to come up off the lows. Fallen angels, especially in this sector, are very interesting to me. Just-in-time manufacturing may be a better description than 3D printing because there's a lot of different ways to do it. I'm looking also into the healthcare sector in this, where a lot of new things are being done with that kind of 3D printing technology in healthcare. They are just starting to make money, and all you got to do is think about stocks like, the big ones in the healthcare sector. See how much money there is in there. When we come back, we'll talk about genetic engineering.
Many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And this is Dave White sitting in for Tom O'Brien. We're actually doing a Tech Insider Hour. We haven't done a big picture review of what's going on in technology and the big things that I'm looking at. We've talked about machine learning, data storage, just-in-time manufacturing. The next one I really, a lot of people haven't thought about. Next year, I suspect the Nobel Prize to go to a variety of people that worked on a thing called CRISPR. CRISPR, for a better description of this, or an easy description, the Reader's Digest version, is this. There is a natural way that DNA in your body, when it is defective, gets fixed. Scientists have figured out exactly how this works, and they are able to go in and do cut and paste of sections in DNA, whether it be human or amoebas. It does not matter. This opens up a Pandora's box of what can and will be used in the near future. I am looking at, by the end of this year, that the CRISPR technology will be allowed to be used on humans. I don't know exactly when that's going to be. I've got a couple of stocks that are in this sector. But when you talk about 3.8 billion data points in a human DNA, you can start easily figuring out that a human is not going to be doing all the sewing and pasting and cutting and pasting in this. There is going to be a need for very specific software for doing this, not mechanically, but electronically through computers and hooking up to rather large computers. There is already several trials where they're doing this. There are a few more hurdles to come. This is a long-term proposition, not something that's going to bounce tomorrow. But there are a few companies at the very beginning of the life cycle on this. But, you know, they're already using it. It's already working, especially when the material in question is homogeneous. That means where all the cells are kind of the exact same thing, that you can really get big rewards in it. If the tissue is the same in the human, very great results already. They suspect by getting the software that they'll be able to target all kinds of different diseases in the near future, from things like problems with kidneys or pancreas. Anytime where all the cells tend to be the same. Right now, they are having great success with ocular tissue, i.e. eyes. They've had about 15 success stories of people getting their vision back by using it. Apparently, this is the easiest test case for genetic editing software. But look for this to be a huge deal next year. As I said, I suspect this is probably in the last 10 or 15 years the biggest Nobel Prize to be awarded. And of course, there will be tons of folks coming in looking for designer drugs based off this and designer ways of fixing problems with people that aren't typically, you know, the one size drug fits all. Because literally you will be able to take somebody's DNA, go in, change it, and then put the cells that were originally from that subject right back into the same subject. That is what's worked so well for that. But imagining building heart tissue by genetic engineering and solving the flaws that came with that human when they were born, when they were conceived. This is very scary because, of course, it is a double-edged sword where people can start using and have started using this kind of technology. Believe it or not, you would think that this stuff is incredibly expensive to do, but there are kits you can buy for less than $200 where you can start doing CRISPR-like things on the tiniest of animals, single-cell animals, that kind of stuff. So it starts at a very low price, but of course, there's not a lot of DNA in a single-cell amoeba. When we start getting to other things, you can see the downside if someone decides to weaponize I don't know, if they can dig somebody up and get the flu virus from the 1918 area where, how many people died? 18, 20 million? You can see where the downside of that would be if they could maybe splice that into something now. So both terrifying and absolutely energizing over the near future. Eventually, this technology has actually brought out a movie that was very popular in 1980, and that was Blade Runner. With many people seeing last year this technology come along, the gentleman that made Blade Runner and Aliens and most of those movies is making the second version of that movie somewhat 45 years later, 35 years later. But what was science fiction in 1982 is closer to science fact, and they're looking at the next level of what happens and what makes a human. If you genetically modified somebody, are they really a human? Do they have all the rights of a human? If you design something a lot of questions out there that are going to be very scary to answer in the near future. The next big sector I'm into is energy storage. Everybody knows how I feel about Tesla. It's great to have a device where you have to throw the equivalent of the car engine away every 4 or 5 years when the batteries die, and you have to pay 20, 25 grand to put in new batteries. Battery technology continues to move forward, but at a snail's pace. It's nowhere close to doing that. There are many different ideas about ways to make what are known as solid-state batteries. These batteries would operate much more like electronics than chemistry. And of course, Tesla is based on a bunch of lithium-ion batteries. And right now, not a lot of discussion about it, but guess what? In Chile, they're draining all kinds of lakes, killing all kinds of lives, birds, all kinds of other stuff down there to get to the lithium that are in those pools. So it's not always a clear idea. Hey, I'm using batteries, I'm plugging it in. Just because the carbon's being burnt somewhere else, it's energy neutral. That's not the story. You have the lithium batteries that have to be recycled. You have a bunch of other things, the decimation of certain areas of Chile to get that lithium. They are close, and many people are close. I read papers almost weekly about getting away from chemical energy and going back into statically charged energy. There's nothing really now on the horizon. I have a very long shot in the portfolio because I know one day I could wake up and see that double or triple or quadruple when and if they get something that works out the door. When we come back, we'll talk about quantum computing, nuclear energy, and we have some headlines to read before the end of the day.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. This is Dave White sitting in for the one and only Tom O'Brien. We're doing a big picture Tech Insider, things that you should be looking at over the next year. Of course, I write the Tech Insider newsletter. Comes out every Friday. You could check it out for 30 days free. It is very inexpensive, especially compared to some of the rewards as of late. So always a good thing to buy with your Tiger dollars also. Pretty interesting stuff. Anyway, I'm looking at a big wave of technology coming across the next few years. We've talked about most of the ones at the beginning of the show. Of course, you can always check the archive if you've missed any of them. But quantum computing, most people start talking about quantum this or that, and it sounds kind of hard. And it absolutely is, because quantum computing or quantum physics is probably the hardest thing in the world to get through your head. I have to listen to things about 10 times to finally get it. That is not uncommon. It is incredibly complex. I will try to put it in a nutshell here. And that is, the quantum computing offers a few things. First of all, we tend to use everything in computers as ones and zeros. Let's think about it as a head or a tail on a coin. Of course, that makes things fairly easy. It's either yes or no. There are a lot of things, though, that especially when you deal with quantum physics, that have more to do with a probability. There are no certainties in the stock market. There are no certainties when you deal with particles at the very smallest level of existence, below the atom size. Once you start looking at electrons, everything else, there's a variety of different things coming on. In the next year, we will see quantum computing IPOs. And why is this so important? There are very certain problems that become insurmountable with classical computing. If we had thousands of years today, even with the fastest computer, they will not be solved. Quantum computers, when they do work, will solve these in a matter of moments. And probably the easiest way to think about this is we talked about a coin. If you kind of flick your finger and spin the coin, is it heads or tails? Well, it's neither. It's both. Until you slam the coin down or until it quits spinning and stops, it's both heads and coins. It's both heads and tails. And if you think about it, what would it be like if you had, let's say, 100 different options on a car? And instead of doing them one by one and figuring out each one, you could literally compute all 100 options at the same time. Well, 100 options can be put together 100 times 99 times 98 times 97. You start figuring out that how many different permutations are there of that 100 moves, of those 100 options on a car. The classical issue in this is called the traveling salesman's problem. A salesman has to go out and make 40 stops over his territory. What is the best route for that traveling salesman to make? And what you find out is that if you have 3, there's going to be 9 options. Suddenly with 4, there's 16 options. And guess what? By the time you get to 40, it's almost uncalculable, especially when you get to maybe 100 stops. There are better ways to do that, of course. And human eyes can look at it fairly quickly. But quantum computing, before you can even blink your eyes, it would have solved that problem instantly. That problem may have been taking hours or even days to run, depending on the time of day, when you could get in and out of a store. there are a lot of permutations, not just whether or not it's the easiest route to get. Do you want your salesman sitting there? How many nights is it going to be in a hotel? You can start seeing all these permutations become huge. And there are a lot of problems, a lot of products that can be made, and a lot of things that could be done online if quantum computing can come to the market. There are quantum computers already made. There is a huge upswell in this, and no more do you have to look for a line out the door than, of course, the heads of state who want this to break every kind of code that has ever existed. And yes, quantum computer will instantly break whatever anybody's made before. Probably, maybe not instantaneously. It may take 5 seconds for a quantum computer built correctly to build the best code written today. If you think that encryption today will solve people reading your emails next week or next year, do not put a lot of faith in it. But at the same time, quantum computing could mean that you could have connections that were unhackable. Literally anybody looking at those connections would change the data and corrupt it. So again, a blessing and a curse. But in the next year, you're going to see IPOs in this sector. My guess is it's going to be the biggest IPO of the year. Nuclear energy is also on my list of things. And of course, there's both fission and fusion. Most people are used to fusion and think of 3 Mile Island. Fission is the next big idea in this. Even without fission being practical today, the biggest and most money being spent on energy is not on renewables. It's not on solar. It's not on anything else. It is about 4 or 5 countries in the world building hundreds of nuclear power plants. And these are the old fusion ones. They have, and most of these are being built with newer technology that is almost meltdown proof. There are even some newer designs that are truly 100% meltdown proof. We'll see those come on in the line in the near future. Most people kind of go, well, you know what? We're running out of uranium. And the answer is, well, we are if you want to go out and dig a pit for it. Guess what? There's about 40,000 years worth of uranium on this planet, but it's in seawater. It is literally everywhere. Right now, the cost of doing that is about twice of digging it out of the ground. Probably every 3 months, I see a new paper where they've brought that down. Just a year ago, it was 8 times the amount. Now it is about double the amount of digging it out of the ground. And probably within the next year, digging for uranium out of the earth may be a thing of the past. Probably also make it a lot harder to find people digging up uranium to make nuclear weapons, especially in countries that we do not like. They may not have this technology in the near future, but it is coming to pass. And of course, that is a big sector where lots of money is going to be made as we move out of fossil fuels in the near future. I'm not saying that fossil fuels are going to go away instantly, but if you're looking for money in the long term, there's going to be some in fission, of course, on the long run, and fusion now. We'll talk about more headlines in the last segment as we wrap up the show.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And this is Dave White sitting in for Tom O'Brien. We did a Tech Insider Hour today. It's just kind of the big picture of what's going to be moving in the near future. We're going to wrap it up here with some headlines torn from the pages of the newspapers today. Of course, everybody's read about Dallas or heard about it. One of the things I thought was most interesting today was that they used a robot to deliver a bomb to an unsuspecting killer and then detonated it. Why this was remote controlled, not a autonomous robot. It made me think of the 3 major laws that Isaac Asimov wrote about in the earliest days when people started to think about this in science fiction. The first rule of robots: a robot may not injure a human being or through inaction allow a human being to come to harm. We've gone almost through the drones, autonomous vehicles, and guess what? Nobody's talking about these 3 laws. Of course, the second one is a robot must obey orders given to it by human beings, except where the orders would conflict with first law. And the last one is a robot must protect its own existence as long as the protection does not conflict with the first or second law. The only problem is who programs these robots and who enforces these laws. This is going to be a much bigger issue as we go forward. Samsung sold 85 million phones, pretty much dwarfing what Apple has. This is a big number, and why basically Android continues to have 85% of the market. Samsung was able to go and crush it this quarter. Still doesn't mean they're making the money that Apple is. But that's it. A little ditty in the Consumer Reports that says that you really shouldn't drown your phone, even though it says it's waterproof. But I don't think you should be tempting the cell phone gods anyway. Microsoft is going after Salesforce. They're putting together their Dynamics CRM which is customer relations management product along with their ERP products. So we're going to see a little bit more about it. I've written about it, talked about it a bit, but many of these big companies are truly going to be doing big battles, and there will be winners and losers over the next year. I don't spend a great deal of my time looking at trading these vehicles in the Tech Insider. They're more about what the general atmosphere is around the stocks that I get that I hope are going to make a ton more money than investing in Microsoft today. I'm looking for Microsoft's circa 1985. But big deal, and look forward to Microsoft going up head-to-head versus Salesforce in the near future. There is a good movie coming out. I think it actually is out today. I saw the previews today. We've talked about in past Tech Insider hours before about the SexNet virus. The gentleman that's made a ton of documentaries since 2000, made some major motion pictures, including some in the financial sector, Alex Gibney. His new one is out and talks a great deal about how computer viruses work, how the United States and Israel got together to make the SexNet virus to basically blow up the centrifuges in Iran. Most people don't know how really tough it is to make nuclear material that would eventually go into a bomb. If a human just touched one, there is enough oil to make a centrifuge blow up. Just the oil that would be left on your finger, and there would be no way to ever clean it clean enough to make it do it. So, the SexNet virus, all it had to do was go in there and kind of mess with the motors just a tiny bit and delay the Iranians for about 5 years. Check that out. 0 days over the weekend. We'll see you Monday. Same bat channel, same bat time. Remember to sell when you can, not when you have to.